When I was a kid, I caddied, I delivered newspapers, I did a bunch of jobs when I was a kid. At age 12, I bought my first stock. I was caddying. The stock market was hot at the time. People I caddied for were talking about it. First stock I bought was a stock by the name of Northeast Airlines. The only criteria I had was that it was selling for less than $5 a share. I figured I could buy more shares, and if it went up, I'd go with more money. That was dumb. But the company was about to go bankrupt. Another company acquired it. It tripled in value, and I was hooked on the markets. So I was hooked on the markets at the beginning of 12, and that's my game. Now, fast forward. At 22, 10 years later, so 1971, I was following the markets, and between graduating from college and going to graduate school, I was clerking on the floor of the New York Stock Exchange. And in that intervening period, there was a lot of aspirations, a lot of desire to go to the moon, to eliminate poverty, to make equality in the United States, and so on. So in that early era, when there was Kennedy, and that made me an optimism. But during that 10 years, the fact is that there was a lot of borrowing of money, a lot of deficits. Back then, gold was money. And money as we know it was like checks in the checkbook that would go get you the gold. You can turn in your paper money for gold, but gold was the real money. And because the United States had borrowed a lot more money than it had, it wrote a lot more checks than it had gold in the bank. And so on August 15th, 1971, when I was clerking on the floor of the New York Stock Exchange, I watched on television as President Nixon defaulted on the obligation to pay gold for the cash. He went on and he said, "You won't get the gold." Of course, he didn't say it that way. He said it in a way where it sounded like there were speculators and so on, and he had to do it. And so on the floor of the New York Stock Exchange, I thought the market was going to go down a lot because, after all, this is a big crisis and the money as we know it ends. And I couldn't have been more wrong. It went up a lot. And what happened was I never went through a currency devaluation before, because in my lifetime, there was no currency devaluation. So that's the first time it happened. So I went back and I looked in history, and I found the exact same thing happened on March 5th, 1933, except rather than the television and Nixon, it was the radio and Roosevelt, and he made the exact same announcement and had the exact same effect. And at that time, I learned two big things. I learned that, first, many things that never happened in my lifetime seemed surprising at the time, and that I needed to study things that happened before my lifetime to understand them. So when certain things are happening, like right now, there are certain things that have never happened in our lifetime before, but happened many times in history. So in order to understand them, I need to understand the patterns, and even more than the patterns, the cause and effect relationships behind the patterns. So that mistake taught me that I needed to understand history. And each of the mistakes has taught me. I made a big mistake in 1982, and I calculated that American banks had lent more to foreign countries than those countries way back. There was a big debt crisis. I anticipated this debt crisis, Mexico defaulting. Great, okay. But what happened is the economy, and I expected there would be a terrible economic situation. And you know what happened? The Federal Reserve printed a lot of money, and it had the same effect. You learn the lessons, okay? Those lessons that I learned let me study the 1929 to 32 period, which allowed me to anticipate the 2008 financial crisis and make a lot of money there when most people lost money. And right now, what's happening now has led Bridgewater to make a lot of money while the markets are behaving badly now, because the same thing happened in the past. So studying history, learning the lessons, writing them down, modeling them. There's a template of what is happening. There's a story.
Do you find yourself with a substantial amount of cash that's currently idle and not generating returns? It's high time you explore the trading app I've recently started using, Moomoo. It now offers an impressive 5.1% APY, plus an extra 3% APY for your uninvested cash. You have to know that 8.1% APY is 17 times the national average savings account interest rate, and there's no minimum deposit limit for cash sweeps. This is one of the highest interest rates I know of. Why I love Moomoo is it stands out by offering zero commissions and no platform fees for stocks, options, and ETFs. It's packed with powerful market analysis features for absolutely free. For example, now is the U.S. stock market earnings season. Financial data, analyst ratings, earnings calendar, and more are all free to use. The 6.8% margin rate is one of the lowest I've come across. You can tap into pro-level tools and information absolutely free. Sign up using my link below and grab up to 15 free stocks and park your idle funds on Moomoo for a sweet 5.1% APY plus 3% APY extra, or earn up to $5,000 in cash rewards when you transfer assets to Moomoo.
What's an order? An order is the system that's operating. How do you operate? So, for example, there is a domestic order. We have constitution and democracy, and that's a system that operates, and that continues on until there's a war, and then there's another system that comes and replaces it. Our system has lasted for a long time. There's also a world order. In other words, a world system, and that world system of operating comes after a war. Why does a war happen? Because conflicting parties of about equal power have a fight, and the dominant power wins, and then they get to set the rules. And the last time that happened was in 1945 because of the end of World War II. So at the end of World War II, the United States had 80% of the world's money. Gold was money then. It had half the world's economy. It had a dominant military power. And for that reason, because it was the dominant power, New York is where the United Nations is. Washington, D.C. is where the IMF and World Bank, they put it there because it was the American world order. The dollar was the world's reserve currency, and that always happens. Before that, at the end of World War I, there was the Treaty of Versailles, and the winners of the Treaty of Versailles determined how the system was going to work after that. And if you go back in history, repeatedly, there is always a world order. There is always happens this way, and it continues. Okay, so how does it work? You end up with that world order, and then you come through a period of peace and prosperity because nobody wants to fight the dominant world power. So that there's peace. And then in that period of time, wars are sort of great equalizers. They reduce wealth differences, wealth gaps, and so on. And then there's a rebuilding process, and that produces prosperity and peace. Also, nobody wants to go back into the war. Everybody remembers how horrible they are. Before that, these cycles typically can take 100 years. Let's say they can take a lifetime, and then people forget because they weren't the same people. They forget how terrible wars are. After wars, people remember how terrible wars are, and they want peace. All of those reasons produces peace and prosperity, and there's also a financial reorganization. But then that peace and prosperity leads naturally to the country that has that having the world's reserve currency. A reserve currency means it's the currency that's accepted. So naturally, the dollar is the world's reserve currency. Before that, it was the British pound during the British Empire. Before that, it was the Dutch guilder. It's the same pattern. And so there's peace and prosperity with the world's reserve currency. Now, when you have the world's reserve currency, the rest of the world wants to save, and they save in that currency. And that leads the country who has the world's reserve currency to borrow. It gives them what's called the exorbitant privilege of being able to borrow and print the world's currency. Boy, that's a good thing to have. And then what they do, of course, is as prosperity continues and asset prices go up, like stocks go up and everything does really well, it encourages more borrowing and spending and betting on prosperity. And that begins to have rise in levels of indebtedness. So you see debt levels rise. And the third thing it does is it creates greater wealth and values gaps. There become greater naturally. The wealth that's built up is distributed unevenly, and those who make a lot of money then begin to have a larger wealth gap, and that creates also an opportunity gap. If we're lucky enough to have the money, we can educate our children well, and so on. That gives them an unfair advantage in relationship to others. And so this wealth gap increases at the same time as levels of indebtedness increase. And then, of course, what happens is the competition increases. The competition increases because when you win and you have the other Germany or Japan or other countries destroyed after the war and there are no other competitors, then it's a dominant position. But over with time, others learn and begin to build up, like China particularly has increased its per capita income and its competitiveness. So China is a competitor with the United States, but all through that time, it was like the British were competitors with the Dutch and so on. So we see that pattern happen over and over. As that power gap narrows, then conflicts about how things should go increase. And internally, there is a conflict over wealth and wealth gaps. And then there's a higher level of indebtedness, which makes for a worse set of circumstances. And that combination of circumstances leads to more conflict and more problems. So traditionally, you see that a lot of levels of debt. The classic way that you see this is, what does a government do when it doesn't have enough money? It's not like they go into the coffers. The coffers are empty. They have no gold. They have not that money. So where do they get the money? They have to take the money from somebody else. That's either through taxes, or what they do, people get angry when they're taking it away and there's a big fight over it. So what they usually do is they print money. And through the Roman times, back in Roman times, they had gold coins. They put less gold in the coins. They put other metals in the coins. And inevitably, they print money when they want to spend more. And that, of course, produces the inflation. It devalues the value of money, and you lose buying power. And when that happens, at the same time, there's a large wealth gap and opportunity gap. That produces a lot of internal conflict of the sort that we're seeing now. You always see populists of the left and populists of the right. What's a populist? A populist is a person who will fight for their side. They are not compromisers, okay? So you get to the point where there may not be compromise. For example, January 6th is right out of the populist playbook. In other words, fighting for power. It's entirely possible that we will see that neither side in the upcoming elections would accept losing. And there's a conflict. So you have that populace and that greater extreme of the left and the right. You have more internal conflict. And then as you have the rising power challenging the existing power, you have the world conflict. And then normally that produces a resolution, which happens through wars, because there's no world court that you bring your case to, and then there's a jury who makes a decision. It's typically through conflict. You have the next war, and you do the same thing over and over again. So that, by and large, is the pattern. I need objectivity to be accurate, but also by being able to measure those things, you could see whether you're improving or not. So it's a type of biofeedback. It starts with education. Educated people are more valuable. And there's two types of education. There's education of like what you know and what skills you develop, but there's also learning civility, learning how to behave with each other to make a productive society. Think about parenting. Think about the importance. Really, what I had was just going back to the basics. What I had was parents who loved me and were good guidance. I went to a public education, and it was a good public school. And I came out to a world of equal opportunity in which there was an opportunity to make decisions and make things happen and then live the American dream. And really, those are the most important fundamentals. And you have a system that provides you good and equal opportunity. I mean, that's basically it. Capitalism, it gives you the opportunity. People who say, that's a good idea, give you money to build it out. It's important to do that broadly for the population because you don't know where the talent's going to come from. If you look at anybody who's been successful over a period of time, the Forbes 400 or something, and you look at those, many of those people came from the simplest, you never would have guessed where they would come from. And so having a broad-based population not only produces a higher level of productivity, which raises income and raises power, it also means that the individuals themselves have a fairer society and they believe that the society is fairer. So these are fundamentals. And when you start to see that, then it's reflected in other things. It's reflected in inventions. How many innovations, technology innovations, what share of world trade the country has, a number of the statistics. You can see that when the United States was dominant or the British that were dominant, they have a high percentage of world trade. And as a result of that, they have the world's reserve currency. So you see it reflected in the currency statistics. In other words, whose transaction? They have the world's financial center. In the Dutch Empire, it was Amsterdam. In the British Empire, it was London. In the American Empire, it was New York as the world's financial center. And so you see it reflected in all of those measures of power. You're traveling around the world. You have the trade routes. You're operating in your currency. You need a military. The United States, for example, has bases in 70 countries now. 70 countries. So you have to be a military power as a result. And all of these powers support each other. As you gain one, you get them also. You have to be a total power. The Soviet Union was never a total power. China is a total power. Soviet Union was never a total power because it was never an economic power. Okay, it had a military that was comparable in nuclear weapons, but it lost because it was never an economic power. So we have that kind of a situation. China now is a comparable economic power. So when we look at these measures, the United States in some ways is a little bit ahead in some and a little bit behind, but there's comparability. The three are creations of a lot of debt and the printing of money by the central bank to pay for it. A lot. Okay, that's number one. You can't spend more than you earn. Just a basic law of economics. You can't keep spending more than you earn because then what do you do that? You create it on debt. And debt has to be paid back, and one man's assets are another man's liability. So if you've got debt, somebody's holding that expecting a real return. And when you don't give them a real return, like we're not giving them the real return now, then they sell the debt and interest rates go up. And then the central bank is in a bind because they have to print more money or they have to curtail it because the day of paying back comes. The only question is whether you pay it back in hard money or deflated money. So think about it. It's like borrowing. When you borrow, it's like borrowing stuff. We think of it as a certain number of dollars that you borrow, but think of it, you're borrowing stuff. And when you borrow and spend, then you can spend more than you earn because you borrow. That makes the difference. So you spend more than you earn. And that means in some point in the future, to pay back, you have to spend less than you earn. And that means quite a change in your spending. So debt is not bad if it gets you the resources to produce more than the cost of that debt. So think of it as this way. If you borrow to have a party, you borrow to go to vacation, you borrow for consumption, there's not going to be an income earning asset. Okay, so the day will come back and you're going to have to pay that back, and that's not good. If you borrow to invest in something that's going to produce more than it cost, and you're going to have that productivity, that was a good move. But you will see it, because if debt rises relative to incomes, then you know you're not doing that. If incomes rise more than the debt, okay, that's a good thing. So those are fundamentals, and that's how the cycle works. So the three things that we just touched on, number one. Number two is the internal conflict thing. When there's a large wealth gap and values gap, then there become the disenfranchised, those who feel you're not taking care of me. And that was very classic with the 2000 election of Donald Trump. Why did Donald Trump get elected? Because there was a population in the United States, a significant population, that said, this system isn't working for me, and I want a fighter. Okay, they don't want a compromiser. They want a fighter. And so you get populists of the right and populists of the left who are fighters and not compromisers. And that's an issue for a democracy, because a democracy is based on following the rules and compromising. But these are win at all cost people. And so that begins to build up. That's why January 6th wasn't a surprising event. It was right out of the populist playbook, because it is win at all cost. And we're in a situation where in the future, we could see neither party accepting losing, and we could see the not following rules. For example, the Supreme Court decisions. You could see that states and towns might say, we are not following that decision. Come make me. In other words, you see power begin to operate. And so that kind of internal conflict is very normal at those circumstances. It's very important to understand how that works. In the 1930s, 4 democracies chose to become dictatorships because there were conflicts between the left and the right. What is fascism? What is communism? That was the same right-left conflict. And then as a result, it produced enough disorder that literally the parliaments chose autocratic leaders. And what did those autocratic leaders do? They fought internally, but they got control. And then they were inclined to fight externally, because these people are fighters. And so that's why there's a tendency to produce a war. So that's number 2, that internal conflict. This is all measurable. I'm describing it in words, but in the book, you can see the lines and the charts that can show you where you are. So internally, it's the conflict. And number 3 is externally the conflict, when you have 2 great powers coming in and you can measure the types of wars. There are 5 types of wars. There is a trade war. There's a technology war. There's a geopolitical influence war. There is a capital and economic war, which is commonly called sanctions. Okay, that exists. And there's a military war. And usually they progress in that order until, like, when you see big sanctions happening, we will hurt you economically. That's sort of a signal that you're at the edge of what could be a military war. Like in Japan, what we did is Japan had this expansion. The United States got in a conflict. It froze Japanese assets in much the same way as we're freezing central bank assets in Russia. That kind of a move limited their oil imports. And so that put them in a corner. And then that led to Pearl Harbor. So these types of patterns repeat in that same way. So the 3 are a lot of debt and money creation, the large internal fighting between the left and the right populists, usually over wealth and values, and external conflict over many things, trade, technology, competition, and so on, that could lead up to a war power. When those 3 things happen together, that's a lot of pressure. That's a lot of risk. And so when I saw those 3 things happening together, and I remember back, I have to study history. If I didn't see many cases of it, I need to study. So I needed to go back to see many of these cycles. I need to go back 500 years. And I studied dynasties in China since the year 600 to see these cycles happening. And they all happened in the same way. So I know where we are. It's about 150 years, give or take 100 years. A real good long one is 250 years. A short one is about 50 years. They're typically, let's say, about 150, but it'll vary a lot, just like the life cycle. I studied history going back to about 1900, and that wasn't good enough. The 1900 allowed me to anticipate the 2008 financial crisis and so on, but actually to think about the rises and declines of reserve currencies and empires, because these cycles take so long, I had to go back 500 years, which one thinks of as long, but it's not, because in those cycles, even there's a limited number of cycles. The typical life cycle is 72 years old or whatever the number is along those lines. And you want to study a few of them. You want to study as many cases as you can. You need to then go back and see those number of cases. But in that 500-year period, I studied the 10 top empires. I saw they all had that cycle. And then I also studied Rome and others. So it's like a movie that happens over and over again. It's almost as though the same story happens over and over again. And the only things that change are the clothes that people wear and the technologies they use. I'm practical. I have to bet today on what's happening today. I have to bet tomorrow on what's happening tomorrow. I'm not a historian who just likes to read the stories of history. I'm a practical guy who's got to place a bet. My performance is measured to 3 decimal points. I have to do practical stuff. You have to accept reality. If you have a condition, diabetes or whatever that is, you have to accept that reality. I'm 72 years old. I've got to accept that reality. I've got to deal with that reality. Okay. That means that I'm less likely to have the next 50 years than somebody who's 12 years old, right? I know those realities. So what I'm trying to do is accurately show those realities with measures so that people could judge those themselves. And then I have a principle, which is if you worry, you don't have to worry. And if you don't worry, you need to worry. Because if you worry about the things that is likely to take place, you can prevent it. There are things that you can do to make your life better if you worry about them and then take action to deal with them. When my parents existed, they went through depression and war, and they came out and they were called the greatest generation by Tom Brokaw. In my generation, it's leaving them with big debts and a broken down infrastructure and a substantially suboptimal education system. Do you know that today, average education for Americans in testing scores put us in the bottom third of all developed countries? And the social mobility rate is one of the worst in the developed world. We always thought that there was opportunity and you could change. So those things have got to be fixed. They can be fixed. But the worst thing is, let's not fight with each other. The key is not where you get the money. The key is what you do to invest in the future to create a better, more productive result of people working well together. So to me, I believe that we need a very strong middle. You need very strong bipartisanship. I think that we have a problem because the two political parties have among them more also extremists. And in order to get elected in either party, you've got to be fairly extremist. And what you need is a strong middle in order to be able to have a mandate and follow that through. But in any case, how we are with each other is going to be the biggest thing. And that's not only domestically, it's internationally. Let's not go to war. Okay, but wars typically last a few years. Let's even be clear about that, because that's a very, very scary thought. And it could be in modern warfare will be much more advanced than the last time we had a world war. The capacity of humans to destroy each other has never been greater. But at the same time, if we don't go to that warfare and you work through, then there's a heck of a competition, and then the systems will compete, and from that competition will come productivity and all those things. So it all comes down to how we are with each other. We are at a juncture. So that's the collective. For the individual, in the book, you talk about, how to protect oneself in investing. How do you have resources? How do you have enough resources? And not only with that enough resources, how do you make sure that you're protected well and all of that? So what happens is, and you can see it in the French Revolution, they call them revolution, but they're civil wars, the Russian Revolution, the Chinese Civil War, the Cuban Civil War, many cases, Hitler, Europe, and fascism and communism and all of those types of things. All of those happen when you get to the stage where there's populism and you lose the middle. In other words, you get those on each side. When the causes that they are behind is more important to them than the system is in jeopardy. They become fighters, okay? That is not a means. They don't get together. They don't say, now, how do we make this work for both of us? How do we compromise? The middle is perceived as weak, and everybody has to choose. And like in the French Revolution, there was a middle. A lot of people said we need change and we need to bring those about in the middle. You have to get on one side or the other, and you're forced to. Otherwise, you're perceived as weak. And so self-reinforcing, you know that in certain relationships, you can get beyond talking. You can get to the fact that, no, I'm going to hurt you, like the Supreme Court decisions could be. In other words, I will not obey. And when you say I will not obey, you're in a power, make me kind of situation. And that's a dangerous situation. Now it could be, I think we're seeing the movement to different states along those lines because of I want to be with more the people I want to be with who have similar values and also will deal with me economically the way I want. Each makes those choices. That causes to some extent a hollowing out when you go from, let's say, a New York or a California to a Florida to a Texas. Then you could lose the tax base and then the polarity is more difficult. And that process has always taken place. And that's what it looks like. And that's what we're operating with now. Of course, at the Civil War, there was a dominant power that militarily beat the other power. And like all of those things, then they were in control and they created a new world order, a new domestic order that was the various rules of commerce and slavery and such things. It was because they won the power and it was, on a per capita basis, the worst war we've had. And, so yeah, it was a terrible thing. And that's how that happens, right? It's been a while since we've had one of those, but we did. I think that nobody knows exactly how they go. And so what we have is, roughly speaking, about 30% of the population, 25-30%, is fairly extreme right by measures. In other words, would be in favor of overturning the elections and so on, maybe not following the rule of law and such things. About 15% of the population, maybe it's 10-15%, is rather extreme left. And there's no party for the middle. So in that, you're getting a creating of who wins the primaries and so on tends to be fairly extremist because 30% of the population represents the majority of the Republican Party, right? Even though there are a lot of moderates. What I would believe, what I would hope to, is that the majority of Americans, if you use my estimates, somewhere in the vicinity of 35 to 45% of the population might be more extreme, but let's call it 35%, and 65% is in the middle, but they don't have a platform, they don't have a leader, they don't have everything, and so you continue to get that polarity. And now, how it moves. It is moving very quickly in a bad way, a conflict way. So measures like what percentage of each of those parties think that it would be better if members of the other party died. One party has 15% and the other party has 10%. What percentage of the party says, I would not want my child to marry a member of the other party? These are significant percentages. So you're seeing this movement in that direction. How does it work exactly? I can't tell you. But it is a fact that, gun rights and the ability to have guns, there are many more guns in America than there are people in terms of that. And some of those people will say, make me, or it could be. I'm not saying how far it goes. I don't know anywhere how far it goes. I'm just trying to say that this is a problem. It is a problem that there's not a strong middle and there's not a strong pulling together. I think the president of the United States should be bipartisan. I think it would be great if they had a bipartisan cabinet and they brought the people together and that those in the middle had that commonality and then those at the extremes were the odd ones out. Like in other conflicts, there are sides, like there were the Allied and Axis powers. And maybe they changed where the geography was. But starting in 1900, we had a world that was closest to each other, that you would have a world war. World War I, World War II, and that means in Europe and the Pacific and so on. And so you have that dynamic now that we're coming quicker together, and there are sides. There are sides based on a common enemy. So in terms of this conflict, the United States has a great power, which is declining relative to the other powers. There is that emerging conflict. So what's happening in Russia and the Ukraine is part of that greater story. China is outside of it. And now, because no one knows how a war is going to transpire, one really learns from the actual war. There are always surprises. This is a very interesting observation now. And China and others are learning, how is this transpiring? And we're learning three big things. We're in the process of learning these three big things. The first is they've kept it to a conventional war. They have intentionally not gone to make it a nuclear or cyber or chemical war. That's in a sense good, though there's the risk that it could be. So the first question that we have is Putin going to win or lose, or what would a compromise look like? Okay, Putin winning and Russia winning consists of a few things. First, get control of the eastern part of the Ukraine. Second, have the Russian economy not collapse. But in other words, if it had a contraction of 10 or 15% of GDP, that's a tolerable contraction. And in his view and Russia's view, worth it. Number three is that he remains in power. And number four is that he remains on the world stage, such as go to a G20 meeting. And now things go on. If that happens, he wins and the West lose in terms of that game. Now that's a problem because these things always resolve to who's the winner and who's the loser. If he doesn't attain that, he probably would escalate. That's a scary situation. How would he escalate and so on? So it's almost difficult to say, is it better that he wins or loses? Well, we're going to find out the answer to those questions. My own guess is that because they can't make it look like anybody wins or loses, that they have an armistice, or what I mean, a ceasefire, the way they had in Korea, and border lines, and they say that that's just a temporary ceasefire, and maybe it sticks. Who knows? Okay, first question, does he win or lose? And how does that work? Second question is, what are the powers and cost of American sanctions? The power is, in other words, can you really shut down the Russian economy? Can you shut things down so that you have enough of an effect so that you change the outcomes? Everybody's looking at that. The Chinese are looking at that. Everybody's looking about what are the powers. The costs are significant too, because what we're doing is politicizing or weaponizing the financial and economic systems. So when you politicize it and freeze a country's assets, many other countries today are wondering, should they hold those bonds in the United States? Because if they get sanctioned, so many countries are neutral or against, they could get sanctioned, and that's a risk, and that could affect the capital markets. And it also produces great inefficiencies, which are economically costly. Because you think, okay, where are the supply lines? Look at what's happened, and the efficiencies are not there. And so that's these sanctions and all of that are very, very costly. So we'll see. We're in the process of seeing that. So far, the sanctions are not shutting down the Russian economy and so on, and they're not having a change in policy. And it is a very important question because sanctions are the United States' only unique power now, because the military power and the economic power has become more comparable than it was before. So that's important. And the third thing we will see, and we are seeing, is how the sides align, and basically into the allied powers and the Axis powers in Europe and in Asia. And we're seeing that. Who will support Russia? Who will deal with Russia? So when you look around, you can see, for example, which ones are neutral. India, Brazil, Indonesia, Mexico, Middle Eastern countries, and so on and so forth, are still dealing with Russia. You'll see whether the countries are on which side, which countries on the other side. All countries are increasingly being forced to pick a side and go into Asia in those countries. I speak to leaders, I speak to most leaders, and they're saying, which side do I pick? Because I'm increasingly picked to pick a side. When you see the president or you see representatives and you see others flying around the world, that's basically pick a side and here are the consequences. The China situation is very concerning because, as I say, Russia is not a comparable power. It's relatively economically, it's a minor power, and you need all of the powers. But China's a different story. Taiwan could be one of those situations. At some point, it will find some form of resolution. But I would say still the odds are that they won't cross the line for the military, but our risks of it are great. It's like two giants wrestling with each other 6 feet from the edge of a cliff. You can say, okay, but you could go over that edge of the cliff too easily. So that's what it looks like to me. What got us here is the injection of a lot of debt and money. It's a hype. In other words, you can hype it up. Think of it as you've got somebody who's weak and whatever it is, and you give them the shot, and then that shot of buying power. And if the amount of spending increases by more than the amount of production, then prices by definition go up. And so there was a massive amount of giving away checks and money, and people seem surprised that they get inflation. Well, they're going to spend that, not going to increase very much in terms of the production. And so what is going to happen? The prices are going to go up when people spend more, okay? And you put on top of that the issue of where we are geopolitically. We're changed the world, resources are allocated. It used to be primarily that they were allocated on economic and profit basis. In other words, if it was cheaper to produce something, then capital would go there, motivated by a profit, and it would produce it and raise living standards in those places, but it would move that profit, that production, from places that would have a hollowing out like the United States and so on in some types of jobs. And we're now in an environment in which resources are allocated by political and ideological concerns or issues. In other words, we're not going to produce it wherever it's cheapest. And also because of worries that we might be in war or that you could be in war, every country wants self-sufficiency. And every country's worried, or every company is also worried, that they might be in a place where they are affected by politics. Think about it. The Nikes that you're buying, the Apples that you're buying, 22% of all manufactured goods imports come from China. And just imagine if the world said, we're against companies that are producing and operating in China, like Russia, let's say, if that was the case. That has an enormous economic effect. And companies today are considering, okay, where do I produce it? And it's not always produce it in the most cost-effective place. That adds to inflation too. And that's our new reality. Even like who gets the money in the system. In 2008, when they had the financial system, what the Federal Reserve did is it went in and it bought bonds. And when it buys bonds, it's buying bonds from those who sell bonds. And the bonds go up, and then those who are investors then take that money and they buy other financial assets. It does not trickle down to the population. It won't get the check to the person that needs to get the check. But in this last time, what they did is the government determined who's going to get the checks, because the federal government can determine that. So the Federal Reserve buys the debt of that, but the checks go where it's directed. So the ideological and non-economic forces, in a sense, but those that are being managed for a greater purpose, move that way. And that's, by the way, also very typical of wars. In all countries, they become a command economy. In other words, if I just left it to the profit system and people buying what they want to buy, it's not going to get the resource allocation a country needs in war. And so you're seeing both of those dynamics taking place in producing inflation. So what does that mean? There's a paradigm shift. A paradigm shift is about a 1 in 10 year shift in the perception of what's likely and what the world is. There was a paradigm that was created by a combination of low inflation and also central banks producing free money. In other words, free money like almost zero interest rate or zero interest rates. That means you never had to pay, if you borrowed the money, you don't have an interest payment. And that in many cases, you had interest-only loans and you didn't even have to pay back the principal practically. And also with low covenants. And the world recalibrated to that kind of an environment, okay? A paradigm shift is when that changes. And so Americans thought, and many people, there was a 40-year bull market in bonds, and they think cash is safe and bonds are safe. That's what they bought it for, okay? And they did not realize, essentially, what they're now realizing. What they're realizing is that you can't judge safety in the number of dollars you have. You have to judge it in the amount of buying power you have. And so if you lose money to buying power because of inflation, you need a compensating return. So for example, with an 8% inflation and a near zero interest rate, you just lost 8% of your buying power, or almost that amount. So then that changes behaviors. As that changes behaviors, people do not want to keep their money in there. I would not keep my money in there. As long as interest rates are low in relationship to the inflation rate and the likely inflation rate, you're going to lose buying power. So that's why you see money moving. It's better to borrow than to lend, and moving out of that. What that does is it creates a difficulty for the Federal Reserve, because not only the amount of bonds that have to be sold are no longer the amount of the deficit. You know, how many bonds do you have to sell? Well, it's the amount of our deficit. We have to sell bonds for that. And if there's other selling of bonds because they're not good returns, then there has to be more and more selling. And then you have the Federal Reserve choosing to sell, that they're going to sell $1.1 trillion of bonds. So who's going to buy all these bonds? When you look at that, that means that there's a big tightening of credit. Now, everybody says, okay, we need to fight inflation, and therefore it's good that they're catching up. They were behind it. It's almost like there's no cost, or inflation is the only thing that people are thinking about. The way you fight inflation is taking away buying power from people. Okay, now you're going to borrow less, there's going to be less liquidity and so on at the time that there's more inflation. So it's not like fighting inflation is one of those things. We fight inflation and that's a good thing and we'll get on with it. It means taking away buying power, and that causes markets to go down and that causes economies to go down. So that's why we're in a period of stagflation. Central bank is going to try to find a middle ground, but there's a lot of debt and somebody's got to pay back, and you're either going to get paid back in real money or you're going to get paid back in deflated money. And because they want to deal with both of those things and try to have a middle course, it'll produce stagflation. So what that means really for investors is, in my opinion, don't hold money in those assets that have those kind of low returns. And then many of the bubble assets, always at the end of a paradigm, people extrapolate what happened over the last 10 years and they're sure it's going to happen in the future, like tech stocks. And no. I went through this many times, the Nifty 50 or the dot-com bubble and so on. That doesn't mean that technology companies won't do well or something. It's just like dot-com companies in terms of that, there's a big crash in those things. A company, when it gets very expensive, it can still provide a terrible return. Some of the best companies can provide the worst returns because they get too expensive. And so we're going through that kind of a dynamic, which again emphasizes to me, have a balanced portfolio with a skew toward inflation hedge assets, although there will be in the near term, over the next probably year or maybe less, but anyway, let's call it a year or so, there'll be a tightening. That tightening causes the corrections and downward moves in most assets because cash becomes a problem. You have that correction, and then you'll have the Federal Reserve come back in, I believe, and then print a lot of money and buy more because that's going to be the problem. So we're in that part of the cycle. You could either maintain a balanced portfolio through that, in which case, if you're having something like the all-weather portfolio or something, which is an all-seasons portfolio that you have, that's the type of time when you have the correction, but you maintain that type of balanced portfolio because you're also seeing that the inflation hedge asset part of that portfolio does very well, although it doesn't compensate for the whole, and you ride through it or you make the tactical moves that navigate it. And I think international diversification is also important. Now that becomes more complicated, but that's kind of it in a nutshell. If you have uncorrelated assets, and you easily can, because when economic conditions shift, it shifts returns from one type of asset to another kind of asset. When you have uncorrelated or low correlated assets, you can dramatically reduce your risk without reducing your return. Just to give that as an example, the holy grail of investing, it could be 5, it could be 10, it could be 15, but you will cut your risk in half, or if you get down to 10 or 15, you will cut it by 80% without reducing your returns. It's more important to know how to diversify well than it is even know how to pick the best things. And one of the problems of the world is that everybody wants up. They want up in the stock market. They want up in the real estate market. They want up in the economy. And that has central banks can produce up by giving it this shot of money and credit. They can always produce that up. But that up over a period of time has a consequence. And that consequence is that there's a lot of debt, and that has to be paid back. That will be paid back in depreciated money. So you don't want to be in that position of like, if your portfolio is going down a lot in this, that's not good. To give you an idea, if you lose half your money, it takes 100% return to get back. You lose 50%, you need 100% to get back. There are people who are in some of these tech funds that are down 70%. This can't be part of the game plan. So the issue of being able to reduce risk through diversification, which doesn't reduce return, in my view, never put yourself in a position that you could lose more than 25%, in like your worst case situation. 25% in a game plan, that can be acceptable. But if you go into that, and if you look at any single asset in buying power, there's no single asset in buying power that hasn't lost 75 or 80%. So you need diversification. I think for the next number of years, I don't know whether that's 5 or 10 years, they're going to be more a comparable power than a dominant power. And how that period of coexistence goes will be very, very important. In other words, avoiding that. And at the end of the day, the strongest will win out. And the most important thing is that the United States becomes the strongest. That will determine the biggest outcome. But you have to recognize the power of China. The number of people is more than 4 times our size. So on average, it had per capita income of half of ours. Then its economy would be twice the size of ours. And if it's twice the size, that means twice the size of buying power on anything you want to buy, whether that's technology or military or something. That's a reality. Since I started to go to China in 1984, and I have gone there repeatedly, and I love the place, and I have a lot of respect for the place and the people in various ways, and I've gotten to know it very well. And I love America. Let me be clear. I've lived the American dream, but I'm making the point that I've known it and I've watched it. Since I started going there in 1984, its per capita income has increased by 27 times. Life expectancy has increased by 10 years. This is a very viable competitor, and where we will be 20 years from now is going to be mostly dependent on, first of all, are we going to have a war with each other, or are we going to then be able to compete, our systems competing, and then can we compete effectively? I think that the desire to avoid a war, that's of paramount importance. Then it makes it less important whether they're richer or we're richer or more powerful, because there are many people in many countries that are not the most powerful, that are having happy, productive lives in their own ways. And so I think that's the war thing is the most important thing. And then we'll be responsible for ourselves and our outcomes. I think it's something like 275 million people who are over 60 or 65. And because of their one-child policy, it used to be that the young would take care of the old. But now you have a very difficult burden because you have 2 old parents who are now in that situation, and even the medical system and so on. That's a great burden. And then they have, a lot of issues, everything from weather issues and so on. So they have a lot of problems. We have a lot of problems. They have, a large poor population and underdeveloped. Now that's both potential and problems. And so it goes back to how do we each deal with our problems very well? And that'll really be it. First, financially, be financially strong. Have a good income and balance sheet, income statement and balance sheet. Think about how many months or years that you could live if you didn't have an income. The more financial security you have, the more maneuverability you have, both to protect yourself on the downside and to take advantage of opportunities, and to know how to achieve a balanced portfolio. This is very important, I think, financially. And then be with people. Your community, the source of happiness. Psychologists have studied that above a basic level, income is not a source of happiness. Community is the highest ranked source of happiness. So how you work well with others. So I think meaningful work and meaningful relationships, to be productive and to also have the joy of those relationships, I think is of paramount importance. And then also to realize what the risks are. And do you understand those risks? And where are you? And where do you live? What are those risks like? To recognize that the world is domestically and internationally breaking into different ideologies and different economic systems, really. That happens state by state as well as around the world. And to understand which are the places that are the best for you in those set of circumstances, to be aware of those risks. And then it's just the fundamentals, raise your kids well and raise productive. I should say that in most of these cases, even the worst case situations, it's okay for most people. In most wars, most people don't die. Okay, most people don't get injured. Okay, most people don't. In most depressions, even most people don't get unemployed. Okay, they are scary situations. But it's not the end of the world for most people. It may be meaning cutbacks and so on, but that's often good because it's okay. You don't want to get spoiled. You want to be self-sufficient, and you can get strong sometimes. So most people can get through these things fine. Just understand what it's like and navigate that well.
Sign up using my link below and grab up to 15 free stocks and park your idle funds on Moomoo for a sweet 5.1% APY plus 3% APY extra. Or earn up to $5,000 in cash rewards when you transfer assets to